Watch this video till the end and get ready for a no bullshit conversation with one of the sharpest minds in crypto VC. Welcome back to the AlphaMind YouTube channel. Today, I'm excited to introduce someone truly remarkable, Ben Middleton, the founding partner at Ascensive Assets. Before diving in the world of crypto VC, Ben spent over 8 years as a high-stakes poker player, mastering game theory and risk management. Then he applied those skills into the crypto space, growing Ascensive Assets from zero to one of the largest and most recognized crypto VCs in the industry in less than just 2 years. Today, they are the tier 1 VC, overcoming with their portfolio performance all the other major players in the industry. That's truly remarkable, isn't it? What I personally admire about Ben is his straightforward and no bullshit approach. He's one of the most critical yet honest voices in the crypto VC space, focusing on token economics, technical due diligence, and risk management. As an early investor in DeFi and GameFi projects and a member of multiple IDOs, he has been at the forefront of crypto innovation for years. I'm thrilled to have him here today to share his insights with you guys. So let's jump right into this. Ben, thanks for joining us.
My pleasure, Nelly. How are you doing?
I'm doing great, especially considering all the positive macro news that are coming to the market finally. God blesses us. And I hope no bullshit from geopolitical side will happen again, at least before the end of the bull market.
Fingers crossed.
Yes, exactly. So let's jump straight to the point. And I appreciate a lot that you gave this opportunity to retail investors and a lot of crypto enthusiasts in AlphaMind community to listen to your experience, to listen to your wisdom and get insights from you directly. Not everyone is so privileged as me to have you as advisor, as a contact person. So it is incredible opportunity for a lot of investors who did not have this chance before. And the first question, definitely, considering your experience in Ascensive Assets and your incredible journey there. So my question is, could you walk us through what you achieved with such a rapid growth when Ascensive Assets literally skyrocketed as a crypto VC fund in just 2 years or even less in 2020, 2021?
Thanks for your kind words. Yeah, I think there was a few different factors really, and one often not talked about factor or overlooked factor is luck. In 2019 we thought it was a good time to raise a venture fund, and whilst we were pretty confident that it was going to be markets would pick up, we didn't really envision things taking off as far and as big as they did. So whilst we had some confidence that markets would turn around, we were pretty lucky that for a combination of eventually COVID and just good macro news that asset prices just kind of exploded. And I think another key factor was kind of the willingness of us to invest into sectors that the market really didn't think at the time was worth it or had much hope. In 2019 especially, there was a few algorithmic stablecoins that had blown up. There was Basis Cash, ESD, DSD, and people just felt like these were kind of Ponzi schemes and these under collateralized coins would not work basically. And we met a really strong team, the Frax team, and whilst we didn't know if it could work, we thought the team was so good that we were willing to kind of bet on them to succeed with just their experience, the technical prowess, and the kind of the willingness to incentivize users to bootstrap rather than kind of expecting them, or expecting users to come on their own. So yeah, we perform that we invest in that team, back them heavily, and they paid off. So yeah, I think combination of the market timing and the kind of willingness to invest in unproven teams with great ideas, and yeah, it kind of really paid off, I think, in the end.
You mentioned a few times a great timing, but according to my memory, 2019 was a pretty boring year for crypto, and a lot of people were not sure if the next bull market will ever start again. There was no even this term like market cycles. It was a bit early, right? Or not everyone understood it. So I thought initially that Ascensive was mostly thriving in 2020, 2021 during the actual bull market. But you said you started it way earlier when a lot of people in the industry did not have a clue what will happen next.
Well, I mean, we were around the industry, and I mean, I was around the industry beginning of 17. But yeah, we were just hanging around in 18, 19, assessing, but we didn't start deploying until late 2019. But we did see opportunities, obviously, and yeah, Frax was one of them. And it was like, I think it was early 2020 when we pulled the trigger on it. But yeah, 2019 was a lot of these Ponzi algorithmic stable coins that were totally unsustainable in how they functioned. And when they blew up, there was no interest in that sector really to invest into. But we saw a pretty good opportunity, and yeah, fortunately, it paid off.
It did, fortunately. And do you remember which was your personal favorite investment that you are super proud about? Your portfolio star.
Yeah, it's a pretty obvious answer here, and it's Yield Guild Games, YGG. Gabby, the founder, he's been around crypto for, I don't know, it's definitely before 18. But he'd been around with a previous startup, and it didn't take off. I mean, the idea probably wasn't that good, but mostly it was just due to the market conditions, really. Any project that launched in 2018, unless you were really well capitalized and you really kind of were cautious with your runway, you just couldn't raise in 2019 or 2020, or it was very difficult to. But yeah, he'd been around in the space, and I think early 2020 we got wind of him trying to start YTG, which was basically an attempt to recreate what I had been part of as I was a teenager or early adult, with these gaming clans, we called them back then, be it, I don't know, Counter-Strike teams, or maybe even Diablo, or other things like RuneScape. Just people wanted to socialize and play together, or play competitively together. And Web3 gaming wasn't really even talked about when he was raising. But I looked at him and thought, well, they are all these kind of professional esports teams that were doing not too badly at the time. They're not doing so well actually of late, but they weren't doing too badly at the time. And I thought, well, crypto is a very strong community. If they were able to get enough people interested in Web3 gaming, and there was a couple of good games, maybe this could really be something. And crypto as well could really help with areas that traditional kind of gaming can't. So it can't, really offer you kind of advice or smart, financial advice in terms of how to kind of manage your money through a smart contract potentially, or you could just do a lot more things that Web2 gaming couldn't, whilst bringing a brand that aligned not only people's passion for gaming, but also maybe monetarily as well. So we backed it. We were really unsure at the time, to be honest, if it was going to even work. And the seed round, it took quite a long time to fill that round. And once it started taking off, once Axie Infinity, people were getting pretty excited about what they had been building. Then it was a natural extension that there would be these kind of gaming guilds, so we would now call them, and that kind of spawned all the other ones like Merit Circle, now Beam, and many others that did very, very well as an investment.
That's cool that you reminded YGG. To be honest, I thought you will mention Axie as your most successful thing. I think you were early investors in Axie, right?
We actually did end up passing on that round. It is obviously now a regret of ours, but at the time, the investment structure was not. It was structured as equity basically, and you did have potential for a token upside 5 or 6 years down the line, but the risk reward of investing in an individual game, I think, is quite tough to justify. We were very close to pulling the trigger there, but we didn't in the end. But looks bad now, but at the time, I don't think we were. I didn't think we were that wrong to pass up on the opportunity.
I see. So you see, guys, professional investors, they also have their own regrets and their own success cases. And by the way, if you're new to the crypto field and you don't remember what is YGG, Yield Guild Games, please Google, because this is definitely an incredible story. I remember YGG in 2021 were considered the #1 absolutely top player in GameFi sector, and not only game guild, but also an investor, also an incubator. They did a lot of activities, and they were literally, well, maybe not the right word, monopolizing, but dominating in a GameFi sector. So every gaming startup was begging them to step in and jump on the cap table. It was incredible story. I didn't even know, to be honest, that they started as a startup who also raised initial funding from VCs and so on and so forth. Beautiful.
Yeah.
Ben, speaking about regrets, you already mentioned that you regret you passed on Axie, and I really admire that you can openly talk about this. But as every investor, you have plenty of cases on your background where it was a big success, also big failure. One of my friends, crypto VCs, always repeats me that as an investor, I quote him, as an investor, while doing due diligence, I have to find reasons why not to invest in startup instead of finding the reasons why to invest. And he's always very critical, looking for red flags, looking for any kind of weaknesses in the team to adjust his past decision. So in your case, can you share another maybe personal story, anecdote, or whatever of that you recall immediately of the most challenging investments or the investments you didn't regret or something like that?
Are you asking for ones we passed on, or
You passed on, or maybe you not passed and you regret that you entered the deal?
Yeah, Axie was one of them. I mean, I think there's plenty we passed on that we were pretty happy about passing on. During bullish markets, you get a lot of deal flow, too much deal flow, in fact, and like the shift of power often goes towards kind of founders, like they're kind of almost like demanding, what can you do for us, apart from money, which, you do want to make sure you're taking on value add capital as much as possible. But yeah, sometimes during a bull market, like it goes the other way, and like founders, they think they have a lot of power and they can dictate terms to you. I think, I don't want to name too many names on the ones we passed on, but there was one recently. There's been quite a lot of craze after the pump.fun success story. I think they recently passed like 100 million in revenue within a year, which is just like totally crazy. But there was quite a few teams that kind of spawned doing similar things, and one team in particular that we passed on. We just knew the founder, and yeah, he had been part of a startup at previous cycle, and one day he just said like, I'm done. He walked away from the startup, and you know, if a founder does that, then it can be perfectly justifiable reasons because life events happen out of their control, or I don't know, they go through a serious mental health crisis or something. But yeah, if the founder's not willing to kind of die for their project, as it goes to zero before they quit, then it's not a great sign. So quite a few teams were keen to invest there. We passed, and maybe this time he'll succeed and prove us wrong. But I think it's a pretty good indication that you shouldn't be investing in people who have previously just basically left investors high and dry, if that makes sense.
That's true. The human factor is the most critical one in all businesses and cases. And by the way, we know each other for years, and every time, especially initially when I asked you about criteria, your standard reply was, we invest in best talents, tech talents in crypto. But I know that it's not all. And definitely during all these cases of success and regrets when you passed, you learned a lot on how to evaluate and spotlight these early opportunities. From your perspective, what are the major criteria you are looking at right now? So human factor is something that you can analyze, but you can't predict. Yeah, today it can be absolutely sane, adequate founder. Tomorrow he's burned out with mental problems, etc. Right? Anything else you could recommend focusing on?
Yeah, I mean, I think any investor, I won't say any, but like investors that I think there are two types of investors. There's ones that can get a feel for the market and they kind of know what's going to do well in the very short term, and those are more kind of trader types. But if you're into venture investing, that time horizon should theoretically be like a 5-year, 10-year period. And I think any kind of venture investor that has more of a long-term focus needs to basically have a kind of a thesis of investing. It could be into specific sectors, could be just be into one sector. If you're, an insurance broker in your day job, right? You should be looking at the insurance protocols in crypto, right? And if you have a deep knowledge in that sector, then you can probably weed out the good and the bad projects there. If you can code, then you can scroll people's projects GitHubs, see which code looks clean, neat, tidy, has good notation, etc. So yeah, I think you can always use the knowledge you have to invest in sectors that maybe A, interest you, or B, you just have good knowledge in, and then use that to kind of DD. And then you've got other things if you're buying on secondary, like token supply and tokenomics, if those things are potential blockers or potential green flags to investing. So yeah, I think if you're further out in crypto is not not your day job, then investing in specific areas that interest you or you have good knowledge in makes a lot more sense than trying to kind of chase trends or fads and jumping on the next kind of hype train project, if that makes sense.
That's absolutely true what you said. But I noticed that you mentioned only kind of fundamental things, right? Quality of code, quality of product, specific, project fundamentals, and then as a secondary, tokenomics, etc. However, I didn't hear from you these marketing metrics like check how big is their community, what QLs, top industry influencers do they have in the team on cap table, and so on and so forth. However, for a lot of market players, these are the major factors. So what do you think of this? Why did you not mention any of these hype factors?
Yeah, I mean, there's no denying that, like, the founders that are kind of like, the Elon Musks of the world, the charismatic or I know showman, you want to call them, show person. They can drive, projects almost by themselves to get attention, success. It is often though hard to evaluate those factors. Just kind of through some sort of metrics. So yeah, I mean, you can obviously just listen to recent town halls projects have, or whatever kind of media they're putting out, and kind of assessing, like, do these founders give off like good energy? Are they like explaining things to try and educate people in a good way, or are they trying to like act kind of almost like pompous and sure, you don't understand my project, I'm not going to explain it to you, is not a good look, right? So you can look at these, and also Twitter followers, Twitter impressions, etc. But you can always buy Twitter followers, so you need to kind of try and find some sort of tool that kind of separates fake from real, or kind of checks how authentic the engagement is, etc. I myself don't follow too much of the big KOL people. It's a kind of a big topic of mine, but it's very hard to kind of know their incentives when they're posting things, right? They often have investments in those projects, so you're not getting an objective opinion on them, right?
By the way, we will touch the point, the question of QLs more in depth a little bit later today. However, would you like also to expose your Twitter? I mean, if you are interested, we can put the link to your X profile to the description of this video, and invite our followers and viewers to go and follow you. I know you are not a QL in the meaning that you have millions of audience, but I think the things that you post there and some insights that you sometimes reveal can be super attractive. So if you allow, I will post it in the description, right?
Sure, though it's mostly me raging about how bad Manchester United are right now. So yeah, if you're not into football, then you might not like following me.
Okay, so it's just insights about football, not insights about crypto.
Occasionally some crypto, but mostly just me raging about football, yeah.
Okay, guys, if you want to follow Ben, check in the description of this video. You will have the link to his X profile. Meanwhile, okay, from football to bull, right? Bull market. My question is, first of all, I'm still figuring out, are we in a bull market already or not yet? Because investors in my network are split into two categories, two armies. One army says that we are in bull market already, and kind of bull market we deserve. Let's adjust and let's learn how to work with it. Others say that we are just entering the true bull cycle according to all fundamentals and metrics, and that is what we will see at the end of this year after American elections and during 2025, the beautiful true bull cycle. How do you feel? What is your personal opinion on this?
I mean, I think, no matter who you ask in this kind of topic, you should basically take anyone's opinion with, like, a pinch of salt. No one has a crystal ball. No one really knows, what the future holds. I personally have always kind of been bullish from Q4 onwards. To date, obviously, it's been, a little bit good, I'd say. Overall, prices, especially of Bitcoin, have ticked up. Some ones like Sui, for instance, they're hitting all-time highs pretty much. But lots of altcoins there are lagging behind. So yeah, I'm cautiously optimistic about 2024. Sorry, 2025. But still a lot of uncertainty. I think you mentioned the US elections. I think a lot of people are waiting for the outcome there. I know a lot of uh, you know asset managers are hoping for a Trump win, just for the kind of the potential price appreciation of assets, or people think that economic conditions will be more favorable with Trump and Kamala in. But I think any outcome will just give more clarity and confidence to the market. And yeah, I just hopefully there's no escalation in the Middle East or in Ukraine or wherever. So hopefully we just get like a nice quiet 2025 and markets gain a bit more confidence. And the interest rates as well are ticking down, which is good. So if interest rates keep going down, then we should get more money printing and hopefully more bullish asset prices. Fingers crossed. Yeah.
Indeed. Well, that makes me positive. At least you did not mention that we are in the middle of bull market already. That is very, very good. And considering this, try right now, please do your best to forget that you are a professional VC investor, because you are also a retail investor, right? You are an angel. You are a lot of roles you share on your shoulders. Since both of us agree that we are entering bull market, and it is for you already third bull market for you in crypto. Can you please share some practical experience and practical advice with retail investors, how to avoid the typical mistakes that everyone does every bull market? Because on one side it's easy to get a lot of money from different sources, channels, and trades. But on another side, it's so easy to lose.
It's an interesting question and easy to give an answer now, but following that answer in a bull market is often more difficult. I think there's two major lessons that I've learned, especially from the 2020 bull market. Biggest one was which actually we somewhat fell for, is knowing when to stop investing. Funnily enough, don't hate me for saying this, but during 2020 early on, valuations are still pretty low. Some tokens launched, they did well. Founders are like, well, let's raise the price, see what happens. And then there's a lot of VC appetite, and founders are like, hey, we'll just keep raising the price. And then they're not saying no, we'll just keep jacking up and jacking up the price. And eventually you get to a point in the bull market where, I know, maybe your friends from college or university are texting you saying, should they buy Ripple or should they buy Cardano or Tron? Or maybe your mum's going like, oh, how's your portfolio doing, after she slagged it off 18 months ago, saying what an idiot you are being in this industry. And when you get to that point, you got to think, right, where's the next kind of marginal buyer coming from? All assets, they need marginal buyers. And when those kind of people are texting you, then the marginal buyers are running out, and you probably should start looking at portfolio and thinking like, well, what should I trim? And unless the opportunity is very short term, maybe I should just stop investing and sit on my hands for a bit and be happy with what I've made to date. We unfortunately made this mistake in some DeFi projects, and a lot of those projects raised beefy valuations and they weren't able to raise again, and eventually their kind of runway ran out, or they just got dismayed at because life was so easy. Now went into a bear market and everything they thought they could do was like 10 times more difficult. So I think that was a key lesson. And I think the mistake people are due to make, which we fortunately didn't do, is when markets are pre-bull or just going into a bull, you should be pretty eager to invest. at that point. And sometimes you can get burned. I mean, I think, earlier this year we had a pretty big run up in some altcoins and people were loving life again, and that was short lived. But the kind of gains you make during the bull market are so large that you can afford to take a loss on a few investments. So if you have some heuristics you use to kind of measure market excitement, or you just notice that crypto Twitter trending is going up, or Google search trending is going up, or I know if you have friends who work at exchange and they're telling you like we're getting like more and more signups each month, then it's probably a good time just to try to buy some primary, buy some secondary, and in areas you think you have a thesis in, and then hopefully the bull market does come to fruition, and then go to lesson 1, where you look at the point when you should stop investing, if that makes sense.
Awesome. Guys, by the way, by primary and secondary, Ben means primary, something like top altcoins on the market, and secondary means like early stage startups, correct?
It's the primary is like SAFs, safes, direct investments into projects. Secondary means liquid tokens.
Vice versa. Okay, I messed it. Forget what I said. I would do the opposite. And actually, this is super cool. First, let's recap. First, know when to stop. And second, invest. Actually, your second advice correlates a lot with traditional wisdom from Web2 market. Buy when the market is red, sell when the market is green, and invest before everything is on hype. But I'm so much surprised. Still, many years in the industry, I see that in crypto VC sector, majority of players do opposite. They invest when everything is green and everything is on top, and get scared to invest when the market is red. Even professional players. Do you have any clue why?
I mean, it's tough to give a generic response there. I mean, some of the fund managers, they're pretty young. They may have raised during a bull market after showing some early, success in investing, and they may not be very experienced, or they may have other reasons potentially. But yeah, I guess one of the things you might want to consider is like founders generally don't want to raise, at least the better founders don't want to raise during bearish market conditions. So you might have some sort of adverse selection in terms of what projects are looking to raise. But you also get some good opportunities because maybe founders need to raise because runway issues. So yeah, I think a combination of maybe inexperienced GPs, principals, and maybe just the projects that don't have to raise, avoiding raising at that point, the better projects at least.
I'm sure some of them will watch this interview and learn how to avoid these mistakes. Not only guys from retail community, but some professional players. I'm absolutely sure they will. And I will regret a lot if I don't ask you about your bullish preferences for among hot crypto verticals for the upcoming bull cycle. So what you are up to this season?
Yeah, it feels like the crypto space has grown so much. Since 2020, we were just having kind of DeFi protocols back then, and now we have roll-ups, layer 3s, all sorts of new chains launching. Yeah, I think it's obviously I'm always kind of bullish on DeFi. Who knows if it's going to be one of the main players in the next bull run, or if it takes more of a backseat role. But just the ability to kind of transact trustlessly between people is just one of the key cornerstone use cases of crypto. I still see that stablecoins being kind of the lifeblood of crypto. So you got some kind of yield bearing stablecoins which are pretty interesting, and quite a few projects are doing that. So quite a few projects doing kind of like leverage yield with real world assets, which are less interesting to me, but there always going to be a demand for safe havens like treasury bills during periods of the macro environment when it's kind of risk off. So I think those will probably do quite well. And there's some more edgy things like the social fi space, things like decentralized credit scores, decentralized kind of LinkedIn's, Facebook's, these kind of peer-to-peer social graphs where you kind of collect data on how people interact and try and assign value to those kind of interactions, which is not the apps today, things like Forecaster and Lens are not there, but I think they'll get better over time, and I think younger generations will care more about their data and not be so easy to click a button saying I agree to all your terms and conditions and sign all their data away to Google
So
or
you still believe in
Facebook,
social
etc.
fi, right?
Yeah.
And in one day having decentralized Facebook and Twitter, okay, that's interesting because I already start losing my trust in this sector due to a lot of projects, and I also did personal investments in different social fi projects last season. And let's say diplomatically,
Usually the first wave fail, one or two survive, and then the second wave does well, if that makes sense. So you have like a first hype wave, and then a second kind of actual kind of usage wave. But to date, Lens and Forecaster, they're not exactly doing well in terms of user adoption. So maybe it won't be a thing, but I still have faith.
okay, by the way, you did not mention gamify.
Yeah, I mean, I think there still will be a resurgence there. It's just like games take a while to develop, good games at least. And there's also this kind of argument of like whether the types of games that are popular in Web 2 or normal gaming, whatever you want to call it, make good Web 3 games or not. And I think a lot of times you see teams try and take like, I don't know, a good example for me is like a racing game. Like I personally do not see too much that can really help a racing game in terms of Web3 tokenomics, etc. My personal view, at least, anyway. But there are going to be interesting games or different types of games that do make good use of tokenomics. I think one of the ones that I'm invested in personally and the fund are is one called Futium. And it's personal to me because I played a lot of Football Manager, which is a football management game. Like it says on the tin, you take over Man United or Real Madrid, and you make player trades and you field a team and you try and win trophies. Futium are doing something similar, but you actually own the football club, own the players. And I think games like that where you have the ownership of the assets can actually be valuable is pretty interesting, and I think a lot more games like that will do well, hopefully.
Awesome. Thanks so much for sharing this. And Ben, considering I know that we have to wrap up shortly, we are already over time, but you're so smart. I can't stop listening to you. Sorry for this. Considering that you're our advisor at AlphaMind Launchpad, and I'm so honored truly to have you as our advisor and friend. Let's share with our community how do you plan help us to thrive on this market and avoid mistakes you saw in many other launchpads. I know you were backing a lot of launchpads last season, and many of them did not perform well.
Yeah, we backed a couple. One did well, one didn't do so well, but they had their kind of boom bust cycle, and hopefully they'll boom again if the market does pick up. And the obvious answer is like, firstly, I could bring some good projects to AlphaMind. I think we made hopefully some good investments, and we can share them with AlphaMind when they're ready to kind of go to market. And similarly, I can also help the DD process on the AlphaMind kind of pipeline of projects. I know obviously InMind is a good source of projects. Yeah, I can hopefully sort those into the best ones, and also we have some pretty good partners as well, which I don't know if I can disclose or not, but I know them, and they also have some good projects that they can bring that will be valuable. And I think the major thing is just helping various projects that do go through AlphaMind with the go-to-market, just trying to avoid various pitfalls. A lot of projects we've invested in have used launchpads. Some have been happy with the service, some haven't. Some didn't ask for advice, and then they end up making some bad choices. And I think not all launchpads are equal, and a lot of launchpad founders are looking to enrich themselves more than enrich the project itself.
That would be awesome. You're our secret weapon. And just to nail it for everyone who is thinking, why such an amazing and experienced guy joined AlphaMind as advisor? What sets AlphaMind apart from other launchpads from your perspective? Because when I'm pitching it, it's always, my perspective, but from your perspective.
Yeah, I think one of the major factors is the integrity of the team. Like I said, some of the founders, they push projects to take on specific market makers, take on specific marketing agencies, KOLs, and they're doing it not for the benefit of the project, but for the benefit of themselves. And I know that's not the case here, which is nice. And yeah, I think you've been around in crypto a good number of years, and you built a successful company in mind. And I think AlphaMind's a natural extension to what you've built it in mind. So I think those work pretty well. So yeah, I think it's a pretty good, pretty good product. Just need to hope the market turns around and there's lots more demand for investing.
Thank you so much, Ben. You made my day today. And the last question for today, you already said that you are not that much into crypto QLs, right? But I think you follow some people on X, for example, from those whom you can learn something or get some insights or latest news in Web3 and crypto, because it's impossible for you alone to monitor all the feeds and everything what's happening on. Can you recommend some QLs, influencers, or just smart profiles for us, for our retail community to follow, who are not bullshitting, who are not selling their own pockets, portfolios for retail investors, but who share some true insights?
Yeah, it's a bit of a minefield, I would say. I think every KOL, influencer, whatever you want to call them, they have an incentive to promote things they're invested in, which is perfectly normal. And they are using their audience to promote hopefully a good project. I feel where the market really fails is, like, to me, if you are invested in a project or have a particular financial interest in a project, you should disclose that when you're kind of putting things on Twitter or Medium or whatever platform you're using to reach your audience. So I tend to stay away from the general KOLs. I think there are quite a few project founders who are more or less outspoken on issues. Someone like Michael Bentley from Euler, who puts out a lot of interesting stuff, some shit posting too. And my GP partner Alex Minningham, he puts a lot of interesting stuff out too. But yeah, I tend to stay away from the traditional people traditional KOLs people name. And in fact, I was at a lunch with some crypto buddies, and we were jokingly calling this guy a Twitter KOL because we didn't know what he did in crypto, and as a kind of a offensive joke that it's not like a good thing to be a KOL, etc.
So Alex Meninga, we will put the link to his Twitter profile so that our viewers can follow him. And any other name?
I'll just get this one. Michael Bentley, Euler Labs.
Awesome. And then
I'll
Michael,
give you
guys,
afterwards.
check in the description of this video. This is super information whom Ben personally follows and whom he trusts in this sector where you never know who shields you something, that you're not sure about. This is extremely important. And by the end of this video, guys, if you watched it till the end, write in the comments what is the most important thing you learned today from Ben. I think he will be glad to come to YouTube in a couple of days and check your comments to understand what is the most important insight you heard from today. Ben, thank you so much. And I'm sure in a few months' time we can meet today. We can meet again together and see where in the middle of bull market we are and what did we reach. And I wish great success for your nowadays portfolio so that in a few years you will be proud of more projects like YGG.
Yeah, I think we're all crossing our fingers that the next kind of 12, 18 months are good. But yeah, I think things are promising. Bitcoin's 64K, 63K. So, let's hope.
Let's hope. Good luck. Thank you.